Welcome to the Conversation Room, where we take complex financial discussions and turn them into simple conversations. I'm Skylar Engelhart, and this is Joe Breslin. What are we talking about today, Joe?
Good to see you, Skylar. IPOs.
What are you mad about?
You're waiting for that one, aren't you? Kind of call me flat-footed. We're going to be answering the same emails 100 times this year. You know that, right?
Yeah.
We have mega companies, the largest private companies we've ever seen going public this year, right? So it's going to be conversation after conversation after conversation with clients about IPO. Should I buy into this? Everybody I know is talking about this. How can I get in? What can I do? How do you think about this topic, IPOs, initial public offerings?
Well, it's the first time that a lot of people will have access to investing in companies that were previously private. And there's a lot of speculation that goes on that, returns are going to be astronomical or out of this world. But really, I think there's a lot of hype involved and that we need to come back down to earth.
I guess come back down to earth. What do you mean by that? In terms of fitting that into your plan or fitting that into your investments, or what do you mean?
Well, if it's this new shiny thing that is available and everybody wants to get the new consumer product when it comes out before Christmas each year, there's this trajectory of things. And so, yeah, you need to take a look at what your overall plan is and hedge what your idea is going to be.
But the new shiny things can make you rich. Well,
it? Will it?
Well, I have to take kind of two sides on this, right? Mm-hmm. One is sort of a skeptical aspect of it in the sense of, if you're getting offered these shares, right, if they're going to be available to retail investors, because the initial public offering, that's what that means, is we can buy them over an exchange. You can buy it in a brokerage account. Like, it's going to be available to everybody to buy. So for a long time, these specific companies that we're talking about in 2026 have been private companies, but that's the case with any IPOs. It's now available to all. So I'm somewhat skeptical to start, because the people that know the company really well, have worked with the company for a long time, have owned the shares privately, are now selling them to you. So there's somewhat like a misbalance of information there. If I'm buying now and I'm Joe retail investor, I'm buying from somebody selling who knows everything about the company. So the valuation has probably reached a point where they've recognized this is a good time for me to start looking to sell, because I want to buy a beach house, or I want to do another thing, or I want to make changes. So I think there's one part of me that approaches them with somewhat skepticism. And I think we see that in the data is these prices, when they first open in the day, they typically may jump to start, but then let's say 5 days, 10 days later, you might see a significant decline in the price. And this isn't a recommendation on the company, but like, this is something we saw with Facebook, or now Meta. Everybody forgets this, but when Facebook first came over to the public, it dropped 50% in the first month that it was open. Now over time it grew.
Yeah, tremendously.
Yeah, but the first initial part of it was, gee, I can't wait. Everybody's talking about, I got to buy into it to immediately lose 50% of my money in the first month. Now, we don't know what's going to happen with any company when it comes public, but very commonly that's the story. And then the other side of it is, these companies, once they become public, some of them you never hear from again because they disappear and they fail to compete, and that's capitalism story. Some of them, like the great companies, we use their products every day. So again, not recommending the company per se, but companies like Nvidia and Microsoft and Apple, they became public in the 80s and 90s. You didn't have to be there at the IPO to make money. You could have invested in any of those companies over the last 2-3 decades and done just fine. So the other side of me says, hey, I don't know what's going to happen the first day when it opens, the first month, but these might be really good companies to invest in for the long term as part of the plan. And typically they're going to be included in funds that we own, right? Some of these larger companies might be included in some of the indices, depending on their size.
Sooner than ever before.
Is that right?
Yeah, they're loosening the parameters to allow the indices to absorb them more quickly, which I think is going to make a significant change to sort of the passive investments that are out there. If you're index investing, and there's normally a period of time when the investment had to be active or available, and now there's a truncated time frame where it can fit into. It's going to be mechanically different.
Yeah, because the size of these companies is very different than when you would, let's say, historically think about an IPO going public to maybe get additional capital to do some different things. These are really mature businesses that we're talking about this year that are going to fit right in the indices because of their size.
I think maybe you say like the folks want to buy a beach house or something, or maybe it's just that they've been working for quite a long time.
Sure.
And now they have the opportunity to actually get paid for the work that they've been doing, just in the way that companies hire and pay, and the different compensation packages of the people that are working there.
Yeah, that's like one side of me is too grumpy and then one side's too euphoric on that, right? It's like it's both of those emotions on it. So like if this company's going to come public, we don't know what the price is going to be after it becomes public. Nobody knows what's going to happen there. But like, how would we think about if somebody says, "Hey, I get maybe not these aren't going to work for me, but if I want to think about early stage companies," right? So how can somebody think about investing in like early stage businesses before they're mature companies, like the 2025 version of these companies? What strategies could we look at now?
Well, if there's going to be growth, you may not need to put all of your capital toward a company that hasn't been profitable or even doesn't have a product that's out there yet.
Yeah, but I was thinking more along the lines like a private equity manager to be able to do that, where you don't really know what the next big company or big, you call them unicorns in this space, right? Where it's $1 billion and it's still a private company. We don't know what the next one of those is going to be. But if somebody wants to get those returns, you're going to have to be earlier in the process than the IPO. It's sort of like the IPO already happened.
You could get access through a private equity manager. One thing you would be making sure that you had was liquidity. And these are things that are available to accredited investors.
So accredited investors for a small percentage of their portfolio, say 5 to 10%, this might be a reasonable way to take a flyer on whatever the future version of this.
Right.
What I think about in these stories sometimes is I went once, and I was in San Diego, and there was a business conference, and we were sitting on like the runway of these of the airport. It's Fighter Town, right? Top Gun, all that stuff that's out there. Oh, yeah. So this big nice setup on the runway, and all of a sudden in the dinner they had one of these jets, and it just was so loud, and it took off so quickly, and it was just gone off the runway, and it just flew away. Mm-hmm. Do you know what everybody at the dinner went and did? They got up from their seats and they walked out to where the plane was. So the plane was gone. It already took off, but we all heard it and we all saw it. So then we walked out there, but there was nothing to see because then we're just staring at asphalt when that happened.
Yeah, and then you can't even get up. It's gone away. You can't even catch up to it.
Yeah, and that's what I think about sometimes in the IPO conversation. It's like everybody wants to be on that jet, right? That's like flying away and going fast. But in the initial moment, right? Like, so in the month that IPO happens, it's like the jet's gone. The valuation has already increased. That's the reason why it's going public in the first place 9 times out of 10. Now, over time, it could grow 10x more. Again, I'm not saying that can't happen, but I always just think of that plane when these conversations come around.
So what could happen is it's going to be valued at a price, and then there could be a buy up where people are trying to make purchases, and then it just increases in value until a certain point, and then interest fades, and then prices decline, and everyone that got into it when it was the latest, greatest might be a little bit disappointed, but
in the short term,
yes. In the long term, it may pan out either way, but not getting caught up in a buying frenzy or into the hype is something that, and taking a measured approach makes sense.
I had a client today ask me about AI of doing that because some of these companies are involved in AI business, but really every business in the world is involved in AI at this point. Mm-hmm. I heard it said the other day, it's like oxygen basically. It's like, does your business use paper? It's like, of course it uses these things. And I think that's how AI is going to be used in all these tools. Now, which companies are going to be generate, which models are we all going to be using is an open-ended question on it. But I think the best way we can think about capturing those returns is by owning businesses. That do real things, right? Create products, create services. And then you'll capture that appreciation. I don't know which one will win per se, but if I'm owning a basket of businesses, I'm capturing the power of what AI is bringing to the workforce or bringing to corporations because I own these companies that are going to be using the tools. So that's the game I would rather play than trying to pick which winner is going to occur out of that game because it's just too hard. We didn't know in 2000 which internet company were going to be extremely successful. Clearly, there were major winners, but there's a lot of graveyard that occurred in that time period as well. So I'm much more comfortable saying, hey, I want to own the companies that are leveraging technology and then own a basket of the companies or the models that are creating it to generate those returns over time.
It's all there.
Yeah.
In your basket. What's the conical shaped baskets that they usually have at Thanksgiving? Capricorn cornucopia. It's a cornucopia. Your cornucopia of
Capricorn. I guess we'll do what do they call it? Astrology next time. We'll do that next conversation. Well, anyway, thanks for joining us in today's conversation. If you have a topic you'd like to discuss next time, send an email to info@armstrongdixon.com. That's info@armstrongdixon.com and join in the conversation. Thanks, Skylar. It's fun.
See ya.